Broken neck, broken economy. We haven't been here for a few weeks because literally I broke a bone in my neck. At the same time, the economy has been all over the place. If we had been here, we would have been pretty much like everyone else, chasing the headlines with very dramatic videos about the market being up, the market being down, up, down, tariffs on, tariffs off, gold up, gold pullback, gold breaking a record, gold breaking another record. And we would have got your eyeballs, we would have got your attention, and we would have been like everyone else, telling you what's happening in the moment without any connection to the future. And there's a good reason for that, because no one knows how all of these economic policies are going to be played out. In fact, there's no way to know because we haven't been here before in history with this type of turbulence in the economy so fast, so quick, and the global reaction to it. We all hope it plays out well. I'm not here to talk about whether these are good or bad policies. In fact, I wanted to come on today and give you an unscripted talk about one particular thing, because at the end of the day, this is a gold and silver channel. And people are asking us all the time, have I missed the boat? What's going on with gold and silver? Is it still going to go up? I wanted to address that because I've been hearing that for decades. When gold broke 1,500, people thought it was too high and they wanted to wait. And then it hit 2,000 and people thought it was too high and it was going to pull back and they wanted to wait. And when it got to 2,200, the people waited at 2,000, wished they bought it at 2,000, and then it broke 2,500, heard it again, too high. And then we broke 3,000. That's got to be too high. I got to wait for that pullback. In fact, people had money in for trades and didn't want to place the trades because convinced it had to pull back. And now we're at 3,300. So have you missed the boat? Well, to break that down, you have to ask yourself, what causes gold and silver to go up? And there are two main drivers, the dollar and demand. I want to address demand first. So what happened with demand? Because we've seen demand increase dramatically. Now, once Russia attacked Ukraine, Biden imposed dollar-based sanctions on Russia. And the rest of the world said, you know what? We don't want the United States to be so powerful over us and tell us what we can and can't do and place dollar-based sanctions on us. So what happened? They started to de-dollarize, meaning lower their reserves in the dollar. And what do you think they replaced in their reserves? Gold. And so we've seen record-breaking buying from central banks 2022, 2023, and 2024, and we're seeing it in 2025. But then the rest of the world caught on too. The hedge funds, the big money managers, the smart money, and then it broke all the way down into the consumer buyer, and we've seen unbelievable demand for gold and silver. And here's the thing. With the tariffs, it's the same thing as dollar-based sanctions. It's telling the world, we are the strongest economy, our dollar's the most important item, and you do what we want you to do. And we see the reaction is very negative from the rest of the world. Hope it works out great for us, and we got to see it play out, like I said. But what do you think's happening in the rest of the world? They're de-dollarizing. They're buying more gold. And we don't see any end to that anytime soon. Now, when we look at the dollar, we know the new administration, Trump loves a weak dollar, and the dollar has fallen dramatically since he's taken office. A weak dollar means higher prices in gold. And what would cause a weak dollar? Well, a slowing down of GDP. Guess what? GDP is slowing down, and many are talking about probably hitting a recession. Now, we don't know if that's going to happen or not, but we do know that unemployment is rising and that spending, consumer spending is starting to worry and be more cautious. And all of that is resulting in what many feel should be a lowering of interest rates. Now, the Fed chair just talked last Wednesday and said basically that he is not going to lower interest rates, that yes, all the tariffs and the new administration policies are causing a lot of what he thinks damage to the economy and inflation worries, and that he wants to wait and see. And of course, Trump that evening said that Powell doesn't know what the heck he's doing and should leave because we need lower interest rates. However, Powell's term ends May 2026. So we know one way or another in the near term, interest rates are going to follow Trump's agenda. Interest rates being lowered, money liquidity rising, meaning loose monetary policy. This all falls into a weaker and weaker dollar. And so when you look at the two causal effects for gold, an economy and an administration that's leading towards a weaker dollar with global demand for gold increasing, where do you think gold is heading? And that's why analysts can't keep up. The analysts at the end of last year and beginning of this year were saying that gold would break 3,000 at the end of this year. When it broke 3,000, they started upping their ante, 3,100, 3,200, 3,300. Now we're past 3,300. As soon as they put out where they think it'll be at the end of the year, we break that record right now. And now I'm seeing 36, 37, 3,800, 4,000, 4,200 by the end of the year. I don't think anyone can put a restriction on where gold will go, and silver hasn't started to make its run yet. So I think there are huge opportunities, and I think gold and silver are a very important part of everyone's portfolio in an economy that has so much uncertainty, in a global economy that has now pulled back from wanting to be so dollar dependent. Gold makes sense. Of course, this isn't any financial advice for you. Check with your own financial advisors. Do your own research. I'm giving you, straight off the cuff, my opinion, because what I believe, my neck is going to get better, but I don't think this economy is going to get better as quick as my neck. This is Devlin Steele for Augusta Precious Metals, signing out.